So we are back, and today I'm going to be talking about where I've been, and we've got the return of the whiteboard, and I'll be speaking about that and just where I've been in the last few days. It's been the longest time I've not posted a video for a long period of time. I think I posted one video this week in like 6 days, so I have not had a break like that for like 2 or 3 years. So yeah, I'll go through the reasons why that's been, and also the return of the whiteboard at last. And I've always said, you guys don't need me when the stock market's going upwards, and this week we've had that, so I timed it quite well. If it was a bit of a red week, maybe it was a little bit different, but I just prefer these videos. I prefer having the whiteboard. I prefer being stood up and talking to you guys rather than being sat down. So yeah, we finally got there. There's a few more tweaks I want to do, potentially the lighting slightly. There might be a little bit of an echo that I want to sort out. Maybe the camera angle, I might drop it back a little bit further. But yeah, we're pretty much nearly there now, which is the positive. In a good enough place where we can bring the whiteboard back anyway, which is great. So where have I been first of all? Well, as you can tell, I've been doing this a little bit over the last few days, so obviously that's taken up a little bit of time as well. As well as that, personally for me, I don't know if many people are aware of this, but YouTube is not my full-time job. I work a full-time job as well as doing YouTube. So when I've done like the full-time job and I get in at probably like 5 o'clock every night, that's when I actually then go to record the video. So it can be quite if you imagine, I say every video takes around about 3 hours to do. Unfortunately, when you want to do something and maybe set up this new setup, you lose the time there to make the videos. And as well as that, personally for me, I got offered, I think this week, I've been doing it a lot recently, but particularly this week, I think I got offered like 13, 14 hours overtime. So imagine that's an extra load on top that unfortunately knocked off, time to make YouTube videos. And yeah, I got offered a lot of overtime recently, and I've been taking that overtime because many of you guys might not be aware, but unfortunately when I actually do these YouTube videos, it is more for fun. Like, I think my pay works out as something like £3 an hour for making these YouTube videos. It's not brilliant at all. So when I'm getting actually offered overtime at work, which is a pretty decent hourly rate, I'm gonna obviously prioritize that. And as well, especially when we're in this market dip at the moment, the more cash I can get to be buying stocks in this dip, I'm going to be taking that opportunity. So yeah, unfortunately it's a combination of that. I needed time to do the setup, and as well, like, overtime has been kind of the priority to get more cash in to buy the dip at the moment. But hopefully now, this week in particular was the big one. Normally I've only been doing like 6 hours overtime, but this week was it was quite a fair bit of overtime that I ended up doing. Like I said, I think like 12 hours, I think it might have been. There was a fair bit of overtime that I did this week. So yeah, that's where I've been personally. But yeah, I talked about me, if anyone's bothered about where I've been. But we'll get stuck onto the stock market right now and what's been going on. So we'll take a look at that. So like I said, whenever the stock market's green, that's when you actually don't really need me. You need me on the red days. And it worked out quite well that I had a bit of time off here to get a few things sorted out and a bit of overtime because we had a green week, so you didn't need me. If we had a red week, I'm sure I'd have had a million comments about where I'd been. Have you quit? I adore it. I'm never going to quit on you guys. I'm always going to be here, especially in the red times. But yeah, we had a pretty decent week this week in the stock market. I mean, if you look at the S&P 500, it was up 6% in the last 5 days, which was a very good rally. And like we always say, people always forget that when the S&P maybe goes up, 6%, a lot of these individual stocks that are massively beaten down will go up more than 6%, and that's what people forget. An example of that was DraftKings, up 30% in the last 5 days. Unbelievable. And this is the exact same thing that's going to happen again. If we get another rally in the S&P, if it's 4 or 5%, same again, DraftKings is going to be up, over 20% in that time frame. And this is what can happen when you rebound so quickly. Which you also have to be, really careful of at the moment. And what I thought was really interesting, I saw this the other day, is that someone on YouTube mentioned this earlier, is that JP Morgan, an analyst, has come out and says they expect the market could jump 7% next week, which is a very bullish sentiment, because if we have another, 7% jump in the market, that's going to be a massive rally in your accounts and individual stocks. And this is a big thing. Like what he said here is that cash allocations surpass March 2020 levels. the amount of cash that's sitting on the sidelines at the moment is so much that eventually, that when this cash comes in, we are going to go on a big massive rally. Only for so long, investors, Wall Street will keep this cash in the side, and eventually when they see the market start rallying, it'll be like everyone trying to get back in, and we'll go on a very good run. So the point that he's making is correct. I think that you have to remember how much cash is here on the sidelines. At the same time, and that's evident when you look at individual stocks and, the indexes, how much cash is being pulled out of the markets. And that is going to happen eventually. I mean, I don't know if it'll be 7% next week, because as we always say, in the short term in the stock market, it can go anywhere. It's 50-50. No one can predict the market in the short term. But at some point, and in the long term, we will go back to, new highs in the stock market. That's proven through history. And one of the last points I want to make is that the last video I made before I disappeared for a few days to get a few things done, is I said, don't make this mistake. I came out and made a video a few days ago saying, don't make the mistake of trying to time the market. It's impossible to do that right now. These are the times where you don't want to be rebalancing your portfolio. People have asked me before, like, you're not as bullish on that position, are you selling it? I say, well, it's true, but I can't rebalance a portfolio in a bear market. It doesn't make sense. It's not the time to be selling right now. Historically, it proves that these are the times where you don't want to be selling. These are actually the times where you want to be holding, and if anything, you want to be buying. And if you're buying, that's actually going to give you the more potential upside in the long term. It's proven that buying in these sort of dips is where you want to be capitalizing to get them sort of returns at the moment. And the last thing I'm going to say is that I actually watched Jazz Wealth the other day, which is a fantastic YouTube channel. And they were saying that even right now, historically, it proves that you want to be a buyer, because at the moment, when you have a 20% dip in the stock market, which we did have, as you can see here, last week we were down over 23% in the S&P 500, and then we've had a little bit of a bump up this week. When the S&P historically drops this much, there is a 37% chance that it goes lower. So there's a higher probability from here that we are going to go on a run here. Now, like I said, it's still very much 50-50. Well, I guess it's not 50-50, but there's a 37% chance we do go lower. And you could play that game if you want to. But his history and the historic dips tell you that the odds now is that we actually do go on a run from here. And that's why you don't be timing it, because when history tells you that this could be the bottom and we could potentially go higher from here, and also the historic data is that when you buy in these dips, you actually get the better return. That's what you want to be doing, and that's what you want to be taking advantage of. Now, like I said, it could go either way, but this is not me saying opinions on this. This is, facts of, historic data of what happens in dips. Right now, we're in a position where we are set to go more on the upside than the downside. And even if it doesn't happen, in the long term, you'll still benefit right now from buying them dips. And as well as that, we're coming towards the, the end of the month, 25th of June. And what's going to happen in, 1 week, 2 weeks time, we're going to have the next set of inflation data on. And once again, what's everyone going to be waiting for on that inflation data? Well, they're going to be waiting to see if that inflation data turns positive, because if it turns positive, what's everyone going to be doing in 2 weeks time? Okay, inflation's peaked. Historically, once again, what does data tell us when inflation peaks? The stock market goes on a run. And I think the next 12 months, historically, the markets return 10% in the next 12 months when inflation peaks. So if we get that catalyst in 2 weeks time, what's going to happen again? We're going to go on a run. So that's what everyone's kind of positioning themselves once again. So, the market at the moment has priced in a very, a recession. The only thing right now is if this recession gets a lot worse. But at the moment, you see a lot of people going, right, a few people making the mistake of thinking the stock market and the economy move in line. They don't. The stock market is always forward thinking, and that's why it's already priced in a recession. The only thing is now is if this recession gets worse than what it is looking like it's going to be, that would be the only thing. But now that the market's priced in a recession, if we start moving positively out of the recession, then the market, when the economy has come out of the recession, the stock market is not only going to have started to recover, then it will have 100% recovered the dip. So that's what you've also got to be careful of right now, is not to be thinking where we're at right now. You want to be thinking about, okay, where will we be potentially be in the longer term? And in the longer term, as you can see here, we can have historic dips, but what will happen without doubt, we'll look back on this and this dip that we're on right now will look like one of these dips. You know, it'll look like a bit of a blip, and you'd go, oh, that was actually a really good buying opportunity. Oh, that was actually a really good buying opportunity. Oh, that one there, that coronavirus dip, that was a good buying opportunity. And that's what the current dip will look like in the long term. So yeah, that's the video for today, guys. Hope you enjoyed it. I'll come back tomorrow with the stocks that I've been buying recently, as always. And if you could hit the like button if you're new, subscribe, and I'll see you next video.